I'm going to show you how to record all of your expenses, revenue, and calculate your profit for your Airbnb using a spreadsheet. And since the template I'm going to give you is really comprehensive for recording all of the expenses types and calculating the profit and taxes on top of that, I'm going to show you in this video how that template works so you can do that for your own property. Now let's get to it. Here we go. This is the spreadsheet template I'm going to provide you with. You can see I've named it Airbnb profit and loss statement. A profit and loss statement in accounting terms is a statement where a business or a person records all of the revenue you've made from sales, from different commissions, basically all the money you've made by providing services or selling products. And that is categorized as revenue. Under revenue, you have a section for expenses. In accounting terms, expenses are called less on the statement. That is because from the revenue, you take out the expenses after you record them. And this is a good point to mention that I'm not a qualified accountant. I just want to provide you with a free template of how I do the accounting for my personal Airbnb. This video is purely for educational and entertainment purposes. I'm sharing with you the way I'm doing the accounting for my rental property with the knowledge I've learned from my finance and banking degree and from working with different financial specialists during the years. Now let's get back to showing you how the spreadsheet works. Now, as we've mentioned, it's a profit and loss statement, which pretty much shows you the revenue you're going to make, then less all of the expenses, and that's going to come down to all of the income you're going to have, which is called taxable income. And then on that taxable income, you calculate the tax, and then you get the net profit you're going to make. Now, this is the first sheet of the spreadsheet file, and it pretty much gets all the different values from different sheets across the file, which you'll see here below. And I'm going to go through each of them. Firstly, if you're going to use this file, make sure you update the financial years. Now, the financial year in the UK starts from the 6th of April and ends on the 5th of April the following year. The example I'm giving you here, this is my revenue and expenses for the financial year starting April 2022, ending April 2023. If you're using this spreadsheet in the future, make sure to update these two cells that hold the start year and the end financial year. These two cells are used across the file on different sheets, so you just need to update the year once. Let's start with revenue. Now, in my case, this is rental income. As I said in the profit and loss statement, a revenue is all the money you're making, regardless of the way you're making it. In my case, it's rental income from renting out an Airbnb property. Now, how I've calculated this is create a new sheet with bookings. So in this sheet, I've just exported all of my bookings from the Airbnb website. And this is when one of the properties I'm renting out on Airbnb started trading on 22nd of July. And this is when I've recorded it. From here, you can see I've started to record the income for each month. I've stopped recording all the bookings on the 5th of April the following year. Now, technically, if the property is already trading, so you've started to let guests in by the time of 6th of April, the starting year, then here on the spreadsheet, you can start recording them here. So it's a newly bought flat and I had to do some work on it before I opened it for Airbnb. So I managed to open on 22nd of July. Pretty much I've removed the booking numbers for you. I've exported the payout date because how we use this is to then decide which sums of the Airbnb payouts to sum up for that specific month and then the amount. So for July, if I click on this, you'll see it's actually a sum of all of these bookings and it's because all of them on the payout date you can see there in July. The way accounting is done this way is when you receive the money. So you're not going to record this when the person has booked in the date, but whether the money actually reached your account. At the end of the day, it really matters what money goes into your account for each financial year. But this is worth mentioning because 6th of April and 5th of April, you need to account for the money that reaches your account between those dates. So if I was a guest and booked something before the 6th of April, and as a guest, I've paid Airbnb before the 6th of April, and if I check in after the 6th of April and Airbnb pays you after the 6th of April, then you're going to record that payout. If the payout is sent to you on the 5th of April, the starting year, which is before this date, then you're not going to include that payout for this financial year. Hope that isn't too confusing. You can read on that online. So here I've recorded all the money we've made for each month, and this money on the booking sheet is then used on the profit and loss sheet. If you click here, you'll see it's all the rent income on this sheet. So if you click here, it shows you rent income sheet value. So we have all the bookings. Then we go to the rent income sheet, which basically is a simplified version of the booking sheet, but without all of the unnecessary information like booking reference number, booking payout date, just contains all the money. I've left a note here to say values I calculated and pulled from the booking sheet. It's good to keep things separated when you're doing your accounting. The less information information you have on the sheet, it's less complicated and it's easier to track. So here we have all the money we've made for each month. Then I also have a cancellation fee, which I have recorded here. I had to cancel for somebody and Airbnb charged me for that. So I've recorded that, which means I'm probably just going to receive less the following month. But just for my personal benefit, I've recorded that. So here we have the total, which basically sums up the entire financial year. And on the profit and loss statement, I just pulled the total from there. So that's your revenue. Now let's go to the expenses section. Here below we have less. Meaning that at the end, when you calculate all of the expenses, we're going to deduct the total from the revenue. That's why it's called less. Start off by cleaning. If you're doing the cleaning on your own, then you'll probably not have any cleaning expenses. And when doing the self-assessment tax return, the Airbnb tax guide tells us that we as hosts, if we spend the time cleaning the property, we cannot incur that and record it as an expense. Unless you're actually paying somebody and you have a record of that in the bank statement, then you can use that as proof that you've paid a cleaner. You cannot say, oh, I've spent 2 hours cleaning, I'm going to count that as £20. You cannot do that. So cleaning as the first expense, I've recorded all of the records on a separate sheet called cleaning bank trans, meaning all the bank transactions I've paid the cleaner, and you can find that somewhere below, cleaning bank transactions. Here we go. Now you can see all the dates and the cleaning fees you've paid the cleaners, and then you total all of them. Now you need to get a bank statement for all the months from your bank, record all of the payments you've made, put them in the spreadsheet, and then it gives you the totals at the end of the year. So this total, I just pull it from the profit and loss statement. Next one is electricity. Now, when you're doing Airbnb and you have different utility bills like electricity, water, broadband, and if you happen to be using the property in between different bookings, you have to calculate the percentage of the expense for that utility bill that goes explicitly for renting it out to guests. What I mean, I'll show you in a bit. So electricity has a separate tab, which is here. You can see we have months, cost, pretty much how much I paid. Then we have occupancy rate. And then we have expense, which is the occupancy rate times the cost for that month. To be entirely sure you're not underpaying any tax, it's really worth calculating the occupancy rate for each month so that any outstanding daily charges for you being connected to the utility electricity system, for example, some energy providers have a daily standing charge for you being connected to the system. So if you're not renting out the property at that time to guests, then that standing charge, along with different consumption like the fridge working, you're consuming energy, but your property is not really acting as a holiday let at that time. So you should not be including those costs as an allowable expense. And this is a boilerplate way to calculate it. I pretty much have an occupancy rate sheet. So let me show you that. Now let's go to occupancy. That's a different sheet over here. You can see I have the days in the month, then days booked. And again, the days booked we take from the bookings sheet. So on the occupancy sheet, we have a month column, days in month column, days booked, and occupancy rate. The days in the month matter because even if you have the same days booked, if they're in different months, then that results in a different occupancy rate. Let me give you an example. So in July, we can see we have 16 nights booked, and then in February, the next year, we have 16 nights booked as well. However, February has 28 days and is shorter than July, which is 31 days, which results in February having a higher occupancy rate than July, because 16 days from 28 is more as a percentage than 16 from 31. These occupancy rates I calculate and then use them across the entire file because they're used to calculate different utility bills. What percentage of that utility bill you can use as an allowable expense, because that's the proportion of the month you rented out that property to guests. Okay, back to electricity. You can see 51% of July is occupied and electricity is 51%. I'm dynamically pulling those. And how you can use that, you go on the occupancy sheet and you update the days booked. So if I update this number, it will update this, and accordingly it will update the number on the electricity sheet. So I've made it, it's all dynamic across the file. You just update each value once on a specific sheet, then it will update across the entire file. No need to copy paste it 100 times. So on the electricity sheet, you can see I have July electricity cost of £82.50, but I've only got the place rented out for half of the month, 51% occupancy rate, which means that I can calculate this. This is automatically calculated in the cell. 51% from 82 is £42, and I'm going to use that as an allowable expense instead of using the entire value of £52.50, just to make sure I'm using less of an expense, which is more accurate to how I've been using the property. And to mention that April is where we finish the financial year. Now, this is because I was fully booked and I've recorded the April in the second year as days in month 5, because remember, the financial year ends on the 5th of April, the second year. So you only have 5 days that month that you can record different expenses and revenue for. So 3 of those 5 days, the place was booked, which is 60%. That's why I have it £21, 60% is £12. And that's my allowable expense for April, the second year. All of that total is £1,131 of electricity paid. That's an allowable expense, although I've paid £1,715. So this value calculates all of the allowable expense from the electricity. You can go to profit and loss and you can see I'm dynamically pulling the allowable electricity expense. The same applies to water and sewage. Now that's considered a property fixed cost, as well as insurance, as well as ground rent. I'm going to show you those in a separate sheet, property fixed cost sheet. Click here. Now, according to different guides I've read, these are the property fixed costs you can use as an allowable expense because you're using the property entirely to rent it out to guests. And since this Airbnb property in particular is a flat that's part of a larger building and it's not a separate freehold house, the fixed costs like insurance, clean water, general maintenance and stuff like that come in 2 separate payment dates. And that's why you can see here on the sheet I have entered July and January. In your case, you can edit those if you have 4 separate payments. If you have it as a one-off payment, you can edit this as freely as you want. So I have insurance, clean water 45, sewage, electricity. Now this is separate than the electricity from the flat. This is probably electricity for different lights in the common spaces, general maintenance, fire alarm, maintenance for the front garden, ground rent, management fees, and whatever else they want to charge you for. The combined column is actually the annual expense for each of those. And then you can see here we have occupation rate per annum, booked days annually. Now, this is pulled dynamically again from the occupancy sheet. If you go back to occupancy, you can see all of those combined and average is 67%. Now, if we go back to property fixed costs, we're using that 67% to calculate how much of the insurance for that property, which is £332 for the year, then times 67% is actually, here we go, £224. And this is the allowable expense you can use from the cost of the insurance for the property, because 67% of the time that property was used to rent it out to guests. So you can use the insurance and all the other fixed costs times the occupation rate, since that's the time you rented it out and didn't live in it. That's how much you can use as an allowable expense. So here in the bottom, I have a total of all those fixed costs that are considered allowable expenses. And I take that value and go back to profit and loss. And I've split all those up on the profit and loss statement as insurance, ground rent, water and sewage, service charges, ground rent that comes out from the fixed cost as well. For internet, I also have a separate sheet on that. If you go here, you can see how much I've paid each month. The percentage of the occupancy rate is pretty much the same standard procedure. You take the occupancy rate from the occupancy sheet. I've used the first few months, I haven't paid anything because I had some extra credit for signing up with the broadband provider. And this is how I calculate the internet broadband. From the total for that period, I've paid £144. The allowable expense part is £96.97. Another allowable expense is repair and maintenance on the property. If you go to the repair sheet, you can see I have a leak sealer, spray board, a mailbox security lock, and then I've also stated the reason. There was some maintenance needed to be done in the bathroom, then the lock was broken, also a chain on the window was broken, then I had to buy a new one. And you need to make sure all of those are bought between the period for the financial year you're currently doing the accounting for, and you're not including any orders that are done before or after the specified period. And it's also a good practice to keep a receipt for all of the expenses, because HMRC can raise an inquiry with you, and they can also ask you for proof of all of the expenses, or they can confirm you've submitted your self-assessment tax correctly and you've paid the correct amount of tax. Going back to the profit and loss, we're almost done with the expenses. Allowable expenses, I've got a separate sheet, allowable expenses. Now you need to read what the Airbnb tax guide considers allowable expenses. Is pretty much everything that guests have damaged somehow and that item needs replacing immediately. And it's not something that you've bought for yourself and for the property and that item has depreciated or you've damaged it or consumed it. It must be explicitly for the use of that Airbnb for the guest. This is, for example, I had to buy a heater because midwinter the wall heater stopped functioning because of usage from the Airbnb, and all those items needed replacing because they were damaged by guests. So that's an expense incurred by the business which I had to pay for. So it only makes sense that that's an allowable expense that you can take out of the revenue and pay less tax. And now we have the total expenses, which in this case is just summing up all of those, which is £2,695.50. As far as I know, there are two tax relief schemes, rent a room and holiday let. A tax relief scheme is when HMRC allow you to pay less tax because they give you a certain amount of money you're allowed to take off from your revenue, from your total taxable income, and then you pay the tax on the rest of it. So for example, the rent a room scheme, if you're a live-in landlord and you own a house or a big apartment and you rent out a room to somebody, then you can use the rent a room tax relief, which will pretty much increase your non-tax allowance and you end up paying less tax. The next tax relief scheme is holiday let. I'm not going to go in depth on explaining that one, but it's pretty much when you entirely use your property as a hotel for that industry and you entirely rent it out. So there are different tax rules for that. So you can go online and read about it on HMRC. So I'm not currently using any of those tax relief schemes, so I've just left them blank, but I've made sure to include those in the profit and loss statement if you want to use them for your Airbnb. Finance costs is when you've used a credit or a mortgage to buy the property and you have to repay it on a monthly basis. This flat I've bought with a mortgage, so I do have the finance costs of several £1,000s each year, which comes down to several £100s each month. However, according to tax rules, if you're using your property as an Airbnb, you cannot include the entire finance costs as an allowable expense. Instead, you can use an allowable expense only of the interest of the mortgage, only 20% of that. Let me give you an example with my case. So the mortgage I have to pay for my property, the interest on that mortgage is actually $1,157. That's only the interest. So that's the cost of you borrowing the money from the bank or from any lender. That's the finance cost. So this figure you'll have to request from your lender. They will provide you for the specific date period you've requested. In my case, when I was doing the accounting for this property, I requested explicitly from the 6th of April 2022 until the 5th of April 2023. In my case, they sent a physical letter, so you wouldn't get it in an email. You can't access it from a portal. So it did take them 2 weeks to provide me with this. So if you're nearing the self-assessment tax payment date and you still haven't submitted your self-assessment tax return, make sure to request this as early as possible because it will take them some time to provide you with this figure. So from this figure, you're only allowed to include 20% of it, which is considered the base rate of the finance cost. Again, finance cost is the interest rate on the mortgage. And 20% is £231 that I'm allowed to use as an expense from running my property as an Airbnb business. We're almost at the end, so the revenue minus the expenses, that's the taxable income. So that's all the money you've made, in my case from renting it out, minus all of the allowable expenses. That's pretty much rental income, which is all of the revenue for this business, which is an Airbnb property, minus the total expenses, comes down to £4,600. And also bear in mind that here we're not taking out the finance cost just yet. And that's the total taxable income, which I calculate by putting 20% on. And that's because all of my other income streams are still below £50,000. And that's the threshold that when you pass £50,000 in the UK, you start paying more tax, 40%. If it's less than 50,000 and more than 20,000, you pay 20% tax. So that's why I'm taxing this at 20%, which is 0.2 times this tile. And you can change this number if you like. And that's £936. So from the tax amount you need to pay from that income, you take out the finance costs. So from £936, you take out £231, this minus this is £705. And then if we take out all of the costs we're allowed to deduct as an allowable expense from the revenue we made, it comes down to £3,978 that we've made as net profit. So this is a good measure of how well the Airbnb property you're renting out is doing. Additionally, this value serves as a pretty good guide on how much they'll ask you to pay when you submit your self-assessment tax online. The link to download this for free is going to be down in the description. Make sure to subscribe to the channel so you get other helpful videos from me. Thanks for watching, and I'll see you again in another video.